It's time for another weekly market wrap up, and I'm here as usual with Roger Scott. Roger, how are you?
I'm doing great, James. Thank you for having me on.
Of course, Roger. Today is a day like no other, in that for the first time in history, the President of the United States has come down with a pandemic infection. And so I guess we should start the discussion with what does that mean for markets?
You know, it's amazing. I got to say, whether you love President Trump or whether you hate President Trump, one thing about him that everybody will agree on, he just brings a lot of drama with wherever he goes.
There's no doubt. Yeah.
Not only that, but his wife got sick too. And some reports came out this morning. There's some recordings of her saying foul things about
Christmas.
and it's just when it rains, it pours. Well, but all giggles aside, this is very serious because it can undermine the economy. It can undermine the political system in America. There's a lot of unforeseeability. He's in that age range. He's in that he's in his mid 70s. He's slightly overweight. He's not, some people say he's more than slightly overweight. Some people say he's not. It's not for me to decide. But the bottom line is he's one of those candidates who's in that area that he's in danger. And we know that COVID, for some people, it's deadly. For some people, it's absolutely fine. The question is, time will tell. And we don't really have a lot of time till the election. Also, we also know that our president has a propensity for sugarcoating things sometimes, maybe not being 100% truthful, exaggerate just a little bit. So I don't think we'll really get a good feel or a good vibe for how he's doing. And we're just going to be told that he's doing really well. He's recovering. And unless, God forbid, something drastic happens, this is just going to all kind of go away on its own within a few weeks. But we've got the election coming. And, the debates were very tumultuous, to say the least.
Yeah.
Not a lot was done, or really, the topics were really ignored. So we're kind of like in between we're standing on shaky grounds right now.
Right.
And the stock market is completely in line with that. The S&P 500 moved below the 50-day moving average again, as I like to call it, the twilight zone, which is between the 50-day and the 200-day line, where it's kind of like in no man's land. The bond market started going up a little higher, but also in twilight zone. It looks like, unless things really become obvious, and it doesn't look like they're going to become obvious till the last second, and even then they're not going to be obvious. It looks like we're going to be in a wait and see pattern. Also, to add to the uncertainty, we've had unemployment numbers come out. While the unemployment numbers are a little bit better, people are starting to raise their eyebrows at the fact that the economy is still near the COVID-19 high levels versus the pre-COVID-19 levels. And that's causing people to fear and doubt what's going on. And then when you add on top of that there's not going to be a vaccine out till at least the first quarter, the original expectations were pulled back from November till January, February, and the market's trying to discover that right now. So there's a lot of question marks. There's a lot more question marks than answers. But here's what I'm going to do, James. I'm going to give you some telltale signs to look for, okay? And these telltale signs will give us a really good understanding or appreciation of what the Wall Street is thinking in real time. There's an index called the Russell 2000, okay? The Russell 2000 follows stocks that have a market capitalization of between $30 million and about $3 billion.
Right.
So when a stock is not tiny, but it's not ready for prime time, it's not ready for S&P 500, or even mid caps, it tends to go into this Russell 2000. And there's 2,000 stocks. And again, Netflix, it was a Russell 2000 stock. Zoom, it was a Russell 2000 stock. Amazon, it was a Russell 2000 stock. So to become a Russell 2000 stock, you have to already be doing something right, but you're not there yet. You haven't arrived, so to speak, yet. And one of the biggest factors, a lot of these Russell 2000 stocks, they have huge exposure to China. But unlike large caps, they're not a they're not a conglomerate. They're not doing a million different things. They're doing one or two different things. So they are a lot more sensitive to the trade war than, say, Johnson and Johnson or Microsoft or Intel. So when Trump announced this major trade war with China a little over about 2 years ago, the Russell 2000, which typically follows the main indice, typically, if you were to look at a 20-year chart of the Russell, and if you were to look at a 20-year chart of the S&P and the Dow, you will see that they have a correlation of about 97% to each other, okay? Since the Trump announced the trade war, we've had very, very little correlation between the Russell 2000 and the major indices. The small caps are extremely sensitive to all this drama with China right now, a lot more than the large caps. Again, because they're not as big. They're a lot more vulnerable to what's going on in the world for obvious reasons. So the Russell 2000 has been, the Russell 2000 has been literally pushed down by about 20 to 25%. So we've seen the S&P and the Dow and the NASDAQ reach higher highs over the last 2 years, as recently as September the 2nd. I keep going back to that September 2nd because the markets, all the major indices made all-time highs on September 2nd, but not the Russell 2000. Didn't even come close. The Russell 2000, if you look at the highs, they've been going down. If you look at the highs on the ticker symbol is IWM, by the way. Okay. IWM, for anybody interested in looking at the Russell 2000. Ticker symbol IWM been going down. The highs, even though the highs have been going up, they are lower and lower and lower. And I believe if the investment public believes or starts to believe that Biden will be the president, we are going to start seeing the percentage of stocks in the Russell start really outperforming the stocks in the S&P and 500. So, for example, if the S&P's 500 is down 1% for the day, the Russell may be down 0.70% for the day. If the S&P is up 1% for the day, the Russell may be up 1.5% of the day. That's how indexes achieve relative strength over another index. They'll still do the same thing. And folks, you guys watching this at home, I'm giving you guys really important info that can really help you gauge this election. So over the next 3-4 weeks, what you really want to look at is you don't want to look at the Russell in an absolute fashion because that won't tell you anything. You want to compare it to the S&P 500, to the Dow, and to the QQQ. And if we start kind of seeing the same song and dance, kind of the S&P's down 1, the Russell's down 1.25, that's not happening. But if you start seeing it budging or not cooperating in light of the other indexes, then we know investors are liking Biden more than Trump. It's a sure giveaway. You will also see something similar with the solar stocks, and you will see something similar with the marijuana stocks. But the easiest way is just to use the Russell 2000, IWM ticker symbol. And if the Russell 2000 continues to kind of just do its own thing and not really outperform in the next 3 weeks, then you know that the investment world still prefers President Trump or believes President Trump is going to win instead of Biden. That is exactly what I'm going to be watching out for. That's going to be my number one election indicator. The Russell 2000 versus the S&P 500.
Yeah, that's interesting. I was interested to note that, with this sudden news and the sudden uncertainty of, associated with Trump having coronavirus, that the market seems to have shrugged that off at this point this morning. Like the losses were steep pre-market, the losses were steep in overnight trading in Asia, and early in Europe. And yet at this point, everything is pretty much flat, except the 2-year government yield is up almost 5%, which is interesting in and of itself. So the sort of the takeaway for me from all that was that, you know, we're in this new reality where the economy really doesn't matter relative to the stock market performance nearly as much as it used to. And what I'm starting to see is that the president doesn't matter in terms of the market and its performance. And this is really an interesting phenomenon, is that the market seems to have moved into a state of being where it's completely indifferent to the goings on of mankind in the world. It's become its own sort of entity. And I wonder if that is something that we should be sort of factoring on a fundamental basis over the long term, in that money is pursuing money and is indifferent to the perambulations of mankind's fortunes.
Well, let's back up for a second. First of all, this whole thing about market being in isolation trade, that's been going on for a while. It's now getting to a point where it's grossly excessive, in my opinion, and based on what you're saying in your opinion as well, that it's visible to almost everybody. It's not something you really have to look at anymore. I'll give you that. I'll agree with you on that. But James, it's been going on for a long, long, long time. I would say it's been going on since the early 2000s, where institutional money really started outperforming retail money. And I'm going to tell you why it's happening. There's a real simple reason for it. It's not complicated. It's because of pension funds. You see, and I was talking about this during the webinar on Wednesday. You've got a pension fund. Like, let's say you're an employee. Here's how it all happened. Americans realized about 15, 20 years ago that unless they start taking care of their own retirement, Uncle Sam is not going to do it for them. And they started taking these pension funds more seriously. You work at a job, you have a cubicle, you get your paycheck at the end of the month. You make part of your paycheck automatically goes into a retirement account. And remember, let's say you want to withdraw from this retirement account. You go to your administrator at work, and you say, hey, I want to withdraw. They say, no problem, but you got to wait till the end of the month. These inflows and outflows, they only happen once a month. Usually the inflow happens on the first, second, or third business day of the month, and the outflow will happen on the last business day of the month. And then you get your check the end of the first week, the next month. So these pension funds, they're not timing the market. The only thing they care about is not creating a ripple effect. They have a certain amount of money that needs to get allocated between this date and this date. And their job is to provide the least amount of ripple effects. They want to smooth liquidity very, very gently. They don't care if the market's going up. They don't care if the market's going down. They don't care what the market's doing. Their sole job is to gently put money into the market. And then at the end of the month, take a certain amount out. And the thing about it is, the amount of money going in is much more than the amount of money going out. And the market continues moving higher and increases that momentum effect that we're talking to. But it really has been going on for quite some time. It's been going on for quite some time. I think it's just more evident now, but it's been going on for a while now.
Yeah, sure. Among the surprises for me in the trading after the announcement that the Trumps had the virus, which incidentally was announced via Twitter by Trump himself at just after 1 a.m., which I just happened to be looking at Twitter when that popped up, and I was just like, what? That's crazy. I mean, in terms of I'm not going to suggest by any way, shape, or form that Trump is anything but truthful in this representation that he has tested positive for the virus. But as a strategy to take the attention off the public perception of the outcome of the debate earlier this week, I couldn't think of a better one. And and it's like, no matter who you are, it's you can't wish ill on anyone. It's just
agreed.
moral to do so.
It would be a brilliant move.
Yes.
It would
Yes.
be now. I'm not going to suggest it's true. I'm not going to. I'm not going to speculate. As far as I know, he's got COVID. But yes, from a strategic perspective, that would be because now no one's talking about the debate. Now everybody's talking about COVID-19. And by the way, I just looked really quickly when you were talking about the Russell 2000, the relative strength. Just kind of wanted to see. So the Russell 2000 is down 0.50 right now, right? The SPY is down 0.72 right now.
Huh.
Just as a, and this is the index that's lagging by about 20 to 25%.
Right. So
So
that's indicating a little bit of bias towards Biden becoming the next president then.
Well, 0.50 versus 0.75.
Yeah. Huh.
But again, it's something you're gonna want to keep your eye on over the next several weeks. And again, you may be right. I don't know. Maybe it could be that Trump, comes out of it 2 weeks from now. It also could be, now that you've mentioned this, it also could be a strategy not just to get our mind off of this debate. It could be a strategy not to go into the next debate and potentially throw off the process to push the election. I mean, I'm just going off based on what you're saying,
Yeah.
assuming it is strategy. I didn't think about that before you brought it up, but it is kind of brilliant.
Well, it is. I mean, and I was thinking about it just yesterday, and this is remarkable. My office and I were discussing the idea that, well, if Trump did get the virus, it would probably be kept top secret, and you'd never hear about it unless he got so sick that he couldn't make public appearances. So for that idea to be so resoundingly refuted by him coming out that night and announcing the fact that he's got coronavirus was just like astounding. It was truly astounding. So, and here we know that he is actively sort of trying to undermine confidence in the electoral process as a strategic sort of approach.
He said so.
Yeah, exactly.
He said
so. I mean, delaying the election was something that he's put forth, and everybody has said, no, that can never happen. There's no precedent for that. Well, there's no precedent for a president being unable to campaign as a result of a pandemic, too. So you would think that even the constitutional founding fathers might be thinking, well, if the incumbent was so sick that he couldn't campaign, then that might actually constitute a constitutional precedent for a good reason to delay the election by a month. I mean, the guy's sick.
Exactly. That's exactly it. That's exactly what I'm saying. Now that you got me thinking along those lines, that's exactly it. This is it. I mean, he's entitled to have his day a debate, right? I mean, so, and if he's physically not capable, that could do it. The thoughts you were having yesterday at 1 a.m. Me and the Partners of Wealth Press were actually talking about at about 9:30 on Skype yesterday when we found out and we both said the exact same thing. I've actually said you would probably never hear about it if it happened.
Right.
And lo and behold, he just comes out on, and he's very calculating. He's not a stupid man. Yes. I don't know. I have no idea, but I like where you're going with this.
Well, so getting back to my original thought or observation, rather, was that the market has shrugged off this in such typical Teflon form that even precious metals, who are typically the most visible beneficiaries of a widely perceived disruption to the socioeconomic status quo, even they didn't do anything. In fact, gold went down. Silver was up very slightly, but gold went down. It's like, maybe he's sick, maybe he's not. It's like,
gold is flat right now. It's actually up 0.10. The spider, yeah. There's absolutely. You're absolutely right. You're absolutely right.
So I guess, sorry.
Well, go ahead.
I guess my sort of resolution to that whole process is that the takeaway for me on this whole thing is that it is very much stand back and observe time in the markets. There's no way you should be deploying capital into anything except maybe short-term headline related company specific developments. And even those movements, I think, are going to be diminished because there's going to be less response in the presence of this unprecedented, like, I think the whole world is just trying to digest all this right now and going, what does this mean? This has never happened before.
And the bond market is completely agreeing with what you're saying.
Right. So with that being said, what's an investor to do this week or next week?
To tread lightly, reduce, do the same thing that I've been saying for weeks now. Reduce your exposure by a huge margin. Make sure you have exposure from the long side and the short side, and diversify as much as possible. If you recall, I was very, very bullish on stocks about 5, 6, 4, even 3 months ago. Then I slowly started getting into ETFs, and then I slowly started getting into defensive assets. And now I would say it's a good time to have about 15% of your portfolio invested. If you want to go more, make sure you have an equal amount of short to long, so you have a very good hedge, because we may see a lot of volatility in both directions. And also metals. I still like copper very much. I still like gold very much. Interest rates, shorting energies. There's a way to get out of this and diversify. I still think energies are going to go down. I still think gold and copper and silver are going to go up. And I think bonds are going to be very, very choppy. But again, all these things are hedges for the stock market.
Right.
Tread lightly. Keep your eyes on the Russell. Keep your eye on pot stocks and solar energy stocks. Those are going to be the biggest giveaways in terms of what the market is thinking in terms of Trump versus Biden, in my opinion.
You bet. And let's wrap up the conversation with a sort of a discussion about the effects of COVID-19. Now, it's infection rates in some states are continuing their downward trajectory. In other states, they're exploding. Internationally, the infection rate continues to rise steadily. In Canada, where we had more or less brought it under control, it is now starting to demonstrate extreme sort of intensity towards infection rates, in the fact that in the last few days we've set daily infection rates equivalent to or higher than the worst part of the pandemic in its earliest stages. So I'm starting to wonder, is that becoming more of a factor in investor sentiment globally than it was just a week ago?
I think it is. We're also starting to see a spike in certain countries in Europe again. We're concerned. Japan is starting to get a little scared again. There is a resurrection. I think there's several factors for that, James. I think one, it has to do with the fact that our timeline got bumped up very inadvertently from November to next year. I think the market and a lot of people were really expecting something to happen in November, and there's nothing happening. There's nothing. I mean, unless Putin wants to share the vaccine that he gave his daughter with the rest of the world. And I say that with tongue in cheek, tongue in cheek, that I think that people have to be patient, and we still. What if next quarter we get a bump and says we're not ready again for the next quarter? Right. Then boom, you're going to have that same January, February stay-at-home rally that we had last year, and Zoom and all those stuff. We're going to have a repeat of what we had last year. It's going to be like a time back machine, And sure. Also another factor is this. In addition to the spike, you're also seeing the flu season coming back. You're getting the cold season. COVID-19 is a lot more deadlier in the winter from what I'm hearing than in the summer.
Sure.
So I think that's a major factor too.
Right. So that would be consistent with the coronavirus stocks as a group. Both the vaccination group and the treatment group are all rising at this stage. For example, Quidelcourt, the company that makes the testing kits that were publicly endorsed by President Trump, that stock is up 3% today alone, and it's up about almost 50% since the middle of September. So, I mean, these are the opportunities in the market, while everything else is, on the one hand, we say tread lightly, stand back. Maybe not so much in the case of some of the coronavirus stocks, which might have another run going into this rising infection rate.
And I started seeing that happen about 10 days ago, and we've been talking about it, and I've been going back into Zoom, Peloton. Like I'm going to do a thing right now. I'm talking about fitness stocks. all those stocks are rising again. It's exactly what we saw in the beginning. In addition, you're seeing a lot of home builders and freight shippers. You're not seeing exactly the same thing you're seeing back then. You're seeing a lot more wider base of stocks. Originally, when it happened, it was all stay-at-home internet cloud. Now you're seeing freight shippers, you're seeing some retailers, because we've seen evidence that other companies and other industries can't succeed in this type of an economy, in this type of a cycle.
Right.
But so you're seeing it's more broader. It's not as narrow. I'll give us that. But yes, we are seeing exactly the same stocks making the exact type of moves. Zoom right now is making all-time highs. We had this. I'll tell you. Here's what was the giveaway, James. On September 2nd, the S&P 500 made new highs and started going down from then. All the stay-at-home stocks a week after that continued making all-time highs.
Right.
Peloton, Roku, Zillow, all of the same stocks that were making all-time highs completely shrugged off the S&P going down and continued going higher. I made several videos of that, but you are 100% correct. You're 100% correct. And I think this is going to continue. But at the same time, I tell investors, don't go all in. Don't go as heavy.
Right.
15%, 20%, unless you have short exposure. What you can do is, you want to have more exposure? Fine. Short the energy stocks. Short the stocks that are short the commercial trusts, those type of businesses. The same companies that were going to do bad are going to do bad again. Airline stocks. So again, if you want to expose yourself to the long side, make sure you have exposure to the short side. Otherwise, 15, 20%, tread lightly. But yes, I agree with those stocks going up, and I think we're going to see more of that.
You bet. Okay, Roger, let's wrap it up there. It's been an invigorating and interesting conversation today, as usual. I thank you for your participation, and I look forward to talking to you at Monday's Roundtable. Have a great weekend.
Thank you for having me on, and you do as well. Have a great weekend. Bye, James.
Bye for now.